All right, guys and gals, back to work tonight. Weekend's over. Time to wrap up this month of July. It's Monday evening after all. It's July 27th, 2020. My name is Joseph, as always, and welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow. That's Tuesday's trading session. And I got a great video in store for you guys and gals tonight. The charts are already in the background, as you can see. Got the oil, got some gold, and of course, we got the Eminis on our radar for tomorrow. A busy, busy week ahead of us. We got end of the month. We got earnings. We got FOMC. Get a lot of great big moves. Man, oh man, do I get a great video in store for you guys and gals. Lots of setups we're tracking for tomorrow, though. Before we jump into the video tonight, before we get started and get our hands dirty on those patterns for tomorrow, I just want to make sure to remind you, subscribe to this YouTube channel. If you haven't done so already, make sure you subscribe to this channel. That way you never miss all the good stuff we publish on this video. And don't forget, if you have any questions at all, drop those questions in the comment section below. And as always, I appreciate you guys and gals tuning in every evening to watch this video. So thank you so much by supporting our channel, by subscribing. Drop those questions in the comment section below. And if you're like me and you tune in every evening to watch this video, if you use this newsletter to get your mind right and your charts right for tomorrow, hit that thumbs up button for me. Always appreciate you guys tuning in every evening on this video. But enough of the introduction. Let's get this party rolling. Time is ticking. Let's kick off tonight's video with the calendar for this week. We have a lot to cover on this last week of the month of July. Now, of course, as we go into the last few drops of the month of July, we know we're going into that end of month volatility, right? End of month volatility. So as we start going into these last couple days here, Tuesday, Wednesday, Thursday, and of course Friday, we have everything coming together, right? End of the week, end of the month, right on Friday. So we definitely expect to see increased volatility over the next 4 days, right? Tuesday, Wednesday, Thursday, and Friday. In addition to that, in addition to the end of month volatility, we're also listening in to headlines regarding new stimulus talks. In fact, tonight we hear from one side of the aisle here in the U.S. They're publishing their findings for their next stimulus package or their recovery plan. So stimulus, right? New injections of capital. We are definitely listening in for more updates on that. They told us last week we'd probably get some deal being made this week. So that is a big known unknown. At some point this week, we'll probably start to see the pieces come together for the next big stimulus package, recovery package, rescue plan, whatever they want to call it here in the U.S. In addition to that, too, we've got earnings this week. This is the climax of earnings season. Earnings season lasts about 3 weeks, give or take a couple days. Most of the biggest names on the S&P and the NASDAQ are going to be reporting this week, with a bunch coming out on Wednesday and Thursday this week. So think about all that volatility we're going to get out of the end of the month, out of potentially a new stimulus package being announced here in the U.S., right? And of course, earnings season, just to throw a few more things on top of it. So volatility with a capital V here for this last week of the month. Now, on top of that, we've also got some key items here happening this week. We get the FOMC meeting announcement on 2 o'clock, right? On Wednesday at 2 o'clock, right? That is a big headline number this week. And we're also thinking we're probably going to get something on gold for rollover. Maybe not tomorrow, but Wednesday, Thursday, Friday. We are watching that gold roll from the 0820 contract to the 1020 contract, basically skipping that October contract, going from August, right, to December, right? Skipping the October, going to 12/20 contract there. So we're watching that. We're watching them skip right now to that December 2020 contract on the gold, right? So keep your eyes later on this week. We'll talk more about how that gold rollover is looking. So end of the month volatility, stimulus talks pending here, FOMC on Wednesday, gold rollover Wednesday, Thursday, or Friday. We're watching more on that. And of course, earnings, and earnings. Boy, oh boy, it is a powder keg of great potential volatility and hopefully some great setups every morning in our trade room here this week. Now, speaking of the trade room tomorrow morning, we open up at 8 o'clock Eastern time. Let's make sure we know what the big news is for tomorrow. There's not a lot of big news on this schedule for tomorrow. I don't think that home price index will be that big of a market-moving event. If I had to guess tomorrow, though, that consumer confidence number around that 10 o'clock, top of the hour, you know, guys, we've seen a lot of our best movement between that 10 o'clock and 11 o'clock hours, right? For whatever reason, the markets tend to be a little bit sluggish, a bit choppy between that 9 o'clock and 10 o'clock hour. But lately, it's been that 10 o'clock to 11 o'clock hour. That's been where we've seen some of the best setups last week. So that consumer confidence number tomorrow morning at 10 a.m. Eastern time definitely tells me if I could only be at my desk for 1 hour tomorrow, 9:45 to 10:45 would definitely be when I'd want to be there. Now, of course, as we go into the rest of the week, we got the inventory report, the FOMC announcement, we got jobs and GDP on Thursday, and then personal income on Friday. So no shortage of major news, no shortage of anticipated volatility. And as I always remind you guys, tomorrow morning, right, that number at 10 o'clock Eastern time, we'll be trading this stuff tomorrow morning in our trade room. I'd love to have you there with me. I'll put all of the membership information to get registered for tomorrow morning's trade room. I'll put all that info down in the description of this YouTube video. Make sure you get registered for tomorrow morning's trade room. We'll open up every morning, Monday through Friday at 8 o'clock Eastern time. But no matter what, though, make sure you're locked and loaded, though, ahead of that 10 o'clock hour tomorrow morning. We'll be in our trade room tomorrow morning as of 8 o'clock Eastern time. We'll have a front row seat, get the charts all prepped up, right, and trade this stuff together. So now you've got a good idea of a bird's eye view here of the end of the month. Earnings, FOMC, stimulus. Man, oh man, so much news going on here this week. It's going to give me whiplash here. Let's jump into some charts here for tonight. Got the S&P, we got the crude oil, we got the gold. Now we know right away that the S&P is probably going to be some of the most volatility we see this week because of earnings, because of stimulus, right? Gold is a definite second place to that because gold obviously is looking at rollover, and since we have stimulus coming in this week here, gold will likely, right, be on our radar as well. All of these markets, though, have very nice setups going into tomorrow. Let's take a look here first, though, on the E-mini S&P. When I look at the E-mini S&P, the first thing I notice is a big bull spike in channel. Opening up the E-mini here this morning, a 7,000 tick chart here, or should I say this afternoon, and you can easily see the bull market, easily see that big bull spike in channel. And so if somebody asks me what's going on here on the S&P today, I would say, well, it's a bull market into a channel. It's a bull spike into a channel. And I'd love to be a buyer off the low of that channel, or even better, underneath some of these lows, just underneath that channel. That's kind of what I'm thinking here for tomorrow. But look bigger, though. Look wider. And all of a sudden, this looks like we might be dealing with a big pendulum swing and maybe a short covering rally, possibly, dare I say, all the way back up here by the end of the week. It all depends on the earnings reports, right? It really all depends on earnings. In fact, you could say this big sell-off last week may have been people trying to take some profit, sit on cash, and then try to finagle their way back in, right, on the dip ahead of earnings. Maybe, right, could backfire, could be a great plan. We know we've got, though, potential here right now with all that big sell-off that we saw Thursday into Friday last week. If these bears, if they can't hold this thing could easily snap right back up to complete that pendulum swing. Or really, depending on how the earnings reports come out here, they may be able to make that move all the way back up at 32.84. So that's the big picture look to it right now. A beautiful look here on the S&P of a range from last week. They go below the range, right back up the range. So I have to think, though, that's probably where those buyers are hunting for right now, that 32.58 and 3/4. So we can see in kind of the short term, right? Short term is a bull spike in channel, right? I want to buy the low of that channel. I want to buy below that channel. Those are where the money will be made on this S&P on the pullback. But if the market pushes higher, I also want to be ready because, again, this could really snap and really run higher here all the way up to that 32.58, right, and 3/4, give or take, right, a couple pennies up there. So that's the definite plan, right? Now, the hardest part, I think, about this is this range. I think that's going to be the hardest part of this whole strategy for tomorrow. You've got that trading range, right? The trading range is going to be a little bit messy, right, inside that middle. So what I'm going to do is I want to buy the low of this channel, but I want to try to avoid trading inside that chop and slop, right, inside of that trading range. Ideally, if I had it my way, I'd get a nice deep pullback, get a chance to reload right down off of those big lows here. So let's put this plan together here. We know there's opportunity to go higher. We know there's certainly a lot of people who want to buy a pullback. Earnings are a major variable overnight tonight and tomorrow morning. So we'll get our plan together and be ready for the action. Now, on the pullback, right? On the pullback, this is a spike in channel. And so if I can get a buy off the low of this channel, right, that would be a great setup. The problem, though, is it's going to put us right inside the middle of that trading range. The next best thing will be a deep pullback. Now, a deep pullback is great, but with that comes another problem, and that is momentum. So we have to really kind of trade around both of these issues. For example, if I can see a nice pullback to the low of that channel, I don't want to trade inside the middle of that range. And what I do is I want to try to buy off of that low while anticipating that chop right inside of that range. And one of my favorite patterns for this actually set up right there, right over the left there. If we can see a pullback, right, I want to see a nice pullback, the low of that channel. Now, at that point now, the moving average will be overhead. At this point here, I anticipate now, just like we saw here and here, we'll probably see sellers try to get short, right, off of the moving average. The problem now, though, is if I try to buy into those stops here, if I try to buy into stops right there, I'm going to be right in the middle of that trading range. What I want to avoid here is avoid that trap. And speaking of traps, look for a 2-try trap below that low. That would be my kind of ideal scenario here if we can get that shallow pullback, right? So again, I want to stay out of the middle. We know we're bullish. I want to buy the low of this channel. If we pull back to that low, moving average comes over. What I'll look for here is I'll look for bears to try to sell short off the moving average. Ideally, I'd like to see a slight higher high, pull back for a trap low, and we call these nested failures. This would be a nested failure with a bear trap. And the reason why I would look for a bear trap is to avoid trading inside the range. Simple as that. If there wasn't an issue with the range here right now, I would say pretty easy setup, right? A seller failure into a bullish pullback combination. So that would really be, if this range wasn't a part of this chart right now, it'd be a seller failure into a bullish pullback, right, for that rise going back up to retest the high. Just like this one, right? We see that bears pull back, moving average comes over, bears try to get short, they fail, and of course, they snap up, snap back, right, for that pullback. Same idea. The problem, though, is I really don't want that in the middle of that range, which is why I'm looking for that 1-try, that 2-try, and that trap and go. Avoid the middle, buy low, right, but buy with a trap because we don't want to avoid the middle of that range. Now, what if the market really pulls back here? I mean, in all reality, that would probably be the best setup for tomorrow because then that would allow me now to avoid buying in the middle, right? I could buy underneath the range right now, which is always a very reliable spot. On top of that, it's also a spike in channel. And spike in channels are notorious for really deep pullbacks. So there's a couple different scenarios I'm watching for as we get a deep pullback here. If the market pulls back nice and deep, look for a 2-legged pullback off the high. You know, sometimes what happens is the market will pull back and leg down. In that situation now that trend line coming down is, well, It's my biggest resource, but it could also be my biggest headache if I'm not looking for it, right? So watch out for the trend line, get above it, and use that trend line as a level of support. I call these two-legged pullback patterns, and they would really be great, right, on that nice deep pullback, again, down into that secondary battle zone, right? Now, another pattern I want to watch for is if it just sharply pulls back. Now, if it sharply pulls back, at this point, you got to worry about the weekend gap. There was a big difference between Friday's close and Sunday night's open. It's difficult to see in this chart right now, but Friday's close was at 32.03 half, right? And of course, Sunday's open was way up top there, right around that 32.11 and a quarter. Pretty big gap. They quickly filled that gap, but those weekend gaps, they do tend to act like a magnet. So if for some reason earnings get spooked, right? Remember, there's a lot of big variables regarding earnings this week. So of course, let's say the market tanks. It tries to fill that weekend gap. What are my options now? My options, again, in addition to that two-legged pullback we talked about, in this case, I want to be a buyer, but I have to worry about momentum for the sellers. In these situations, I want to use another one of those nested failure patterns. This time around, though, I don't necessarily need the trap low because the space overhead is not the issue. What I want to do, though, is get the bears trying once, the bears trying twice. I love to draw a support trend line here. Let those bears try once, let them try twice, right, and buy back up from there. These patterns oftentimes result in a two-try trap pattern just below that range as well. So again, it's a nested failure pattern. Again, trying to absorb that momentum. Different reason for a nested failure this time, right? The first one we talked about, I was trying to avoid the middle of that trading range. Deeper pullback. Now I'm trying to absorb a lot of the bearish momentum as they undoubtedly try to fill that gap. So a safe way to do it is let the bears try once, let them try twice, buy into those stops, and then again, right, grab that trap before we get back up to the other side of that trading range. Guys, we see these patterns, these nested failures into two-try traps. They're very common in range days, in trending days. In fact, we do a much deeper dive on those specific combinations, right, inside of our free trading class. What I'll do is I'll put a link up top there for you in the upper right-hand corner. Grab that link. Make sure you get registered for our free trading course that we can learn all my favorite patterns, learn the failures, the traps, the pullbacks, the strength, but most importantly, learn, right, and see how we apply those setups to our favorite futures markets. Grab that link in the upper right-hand corner. Obviously, the best thing to do is to trade it with me tomorrow morning in the trade room. But if you can't be there with me, the next best thing is to grab that free trading class, learn the setups, learn the strategy. That way, when you come back tomorrow night, you'll have a lot more knowledge about what I mean when I say a nested failure into a two-try trap pattern. Now, I mentioned earlier, this could easily keep on going higher, especially with earnings around the corner here, a lot of volatility into the end of the month. So how do I buy this market going higher here right now? What would be an option as we go long? Well, when it comes to a breakout, and that's really what this is, it's a range-bound market. Now, I will say there's a lot more momentum for the bulls than there are for the bears right now. So I definitely do want to be a buyer. But let's think about this because we have that measured move overhead at 32.38. That's going to be a level where a lot of buyers will take their profit. Bears will come in around that 32, right, 38, 30, 32, 39 high up there. So what are my two favorite breakout patterns? Well, the first one's going to be a 1, 2, 3 breakout, right? Strong move up. If I can see a strong move through, a pullback to the moving average, a strong jump off the moving average, now I have that 1, 2, 3 breakout pattern. I can mark up that high, I can mark up that low, and I could buy the first test off the low of that new hidden channel. I call these 1, 2, 3 breakouts into hidden channel pullbacks. Another pattern I like to look for is called a two-try breakout. A strong break higher, a shallow pullback, barely touches the moving average, a higher high in price, and a trap low off of that low. Now, I do like to combine those two try trap patterns along with, right, a level of support. So I will always try to find some additional channels, some additional support levels that I combine with those entry patterns. So two breakout patterns, right? That 1, 2, 3 breakout, confirming to the high, confirming to that measured move, mark the high, mark the low. First test is always the best test, right? Off the low of that channel. And remember, the two try breakout, right? Strong move up, shallow pullback, higher high. Again, this will usually come just scrape the moving average there. Look for that trap low. Look for that trap low, right? And you're off to the races as we go. Now, don't forget, the buyers are trying to get up to that what? That 32.58, right? 32.58. That's our objective here for tomorrow. Now, how could I sell this market? The hard part right now is we're not really at a very good spot to be a seller. There's a lot of bull momentum. There's a big short covering rally, right? All the sellers who sold off last week, right, when the news got bad. Now, of course, all those bears holding their shorts now, they now have to get out for a loss. And that can oftentimes rally this thing pretty strong, right, on this short squeeze. So knowing that, right, knowing the shorts are squeezed, knowing the shorts, right, are really pinned against their their stops right now, I got to be careful being a seller on this. So how do we sell a bull market? Well, if I'm not at a major turning point, if there's nothing there for me to latch onto, I have to wait for a full-blown reversal. Now, what does a reversal look like? It's just like that 1, 2, 3 breakout pattern, but in the opposite direction. So a strong move down, a pullback to the moving average, and a strong jump off the moving average. Now, in this situation, you have to assume they're hunting for that weekend gap, and then most importantly, down to retest those big lows. If I can get a 1, 2, 3 breakout, again, I'm not going to try to sell that first pullback. Why? Because that's where buyers will be looking to get long, right, into stops, right? That's where seller failure patterns will come in. Just like we saw back here and back here, right? Same thing over there. But if I can see a 1, strong move down, 2, hold that pullback, and 3, right, jump off the moving average, now I can mark up that low. I can mark up that high. And again, I always like to grab that first test off the high of that hidden channel. 1, 2, 3 reversal pattern, right? 1, 2, 3 reversal into hidden channel pullback. Or let's say the market collapses, right? Let's say it collapses here and we roll lower. Watch that, right? Watch that shallow pullback, right? That lower low. And again, right, this has to be a very strong collapse, right? Very strong collapse there. Watch that shallow pullback, watch that lower low, and that trap above the high. Now, obviously, this one will be a lot less reliable than getting the 1, 2, 3 reversal, because when reversals happen, that's pretty much a guarantee now, right? A lot of sellers are going to be selling off the high of that, right, of that channel. If I just kind of sink down like this, right, it may still snap, right, with a 1, a 2, we may still get that nested failure and back up again. But if they can really collapse going lower, if they can really give me that shallow pullback, that lower low in price, right, that's the giveaway. Then you know there are going to be lots of bears up there looking to pick those pockets, right, and sell above that trap high. Again, targets are back to the weekend gap, right, and back down to fill those lows at that 31.91 and change. All right, guys, the plan is pretty simple here for the S&P. Looking for nested failures below the range, looking for a possible breakout, and again, I want to stay away from the middle of that trading range. And again, don't forget, make sure you grab that free trading course linked up in the upper right hand corner. I'll put all the links, by the way, for the free classes, for the trade room tomorrow morning. I'll put all of that for you guys in the description of this YouTube video. All right, we are looking good here. We are looking good. S&P locked and loaded. Don't forget earnings overnight, earnings in the pre-market, right? Be careful overnight on the E-minis right now. How about some oil? Oil also has a bit of a pendulum swing going on. Oil also has a bit of a short squeeze going on here. What do we see happening right now on the oil? Well, we definitely can see a very strong bull run to finish off today's session, but put it in context though, and you can see what's really going on here. We had that big bear move down into that trading range last week, right? That was last, of course, Thursday. The range was on Friday. And you'll notice how they have rotated back and forth here, right? From the low Low to the high to the low, low to the high to the low, and now back up to retest those highs. It's a very strong bull move, but we are at a very important area. Not only do we have that pendulum swing up there, right? The amount of the move below the range is the amount of the move above the range, but we also, you can see here, have that big, juicy, expanding triangle there, right? Which is also a key area of resistance. So we're definitely bullish. The problem, though, is that range, right? That range is going to act like a magnet, right? That range will act like a magnet. Goes up, back down, goes up, back down. Will this one go up and back down again? That's the plan, right? That is the plan here right now. The only problem is got a whole lot of bullishness, right, on this chart right now. So how do we sell the high of a range, right? After all, it's a bear market into a range. How do we sell above that range? Range-bound markets are balanced, right? Buy low, sell high, avoid the middle. I want to stay away from the middle. I want to buy low, I want to sell high, and use that range as a magnet. Now, a lot of this we talked about on the S&P, but we'll use this in a slightly different way here on the oil. Got my buy zones, got my sell zones. So I want to sell back down into that trading range here. There are really two setups I'm watching for right now. One would be a nested failure, right? So buyers trying once, buyers trying twice, right? That will be one pattern I'm watching for here tomorrow. Either a short off the trend line, or even better, a trap high above that prior high. Both of those will be valid entries, right, going lower here. I also want to keep in mind, too, if the market drops like a rock here, to keep an eye out for a trap, right? That's also a possibility as we go. And it is possible, it doesn't seem likely, but we may see a 1, 2, 3 reversal. I might be able to grab that trend, that new channel, right, and get short off the high of that channel if we can get the thread the needle there doing well, right? I don't want to trade the middle of that trading range for a retest of that low. Those are the three scenarios I'm kind of watching for right now to be a seller. So again, I do want to be a bear up here. I don't want to buy this market because of location. It's a range. It's not a trending environment. Yes, it is a very strong bull move, and because of that, in order for me to want to sell this market, I have to give the buyers the benefit of the doubt, right? Let them try once to buy the pullback, lower low, let them try a second time now, and watch these swings, right? Watch the trend line, good signal there, right? That'd be a nested failure, right? Or watch that trap high, right? Both of these will be very reliable setups here, right? So again, it's a nested failure, right? Nested failure patterns are great because they help me to absorb the market's bullish momentum to be a seller, right? A nested failure off the trend line, a nested failure right above that trap. That's the gold right there, right? That's the good stuff that will trap high and then back down again. A couple patterns I'm watching for here on the oil. Now, if the market runs lower, keep your eyes open for those two try traps, right? Keep your eyes open for two try traps. If the market just kind of runs lower here, I don't want to chase after it. I don't want to trade the middle. I want to trade above the range, right? Sell above, buy below. If the market takes a nosedive here, right, takes a bath, strong move down, shallow pullback, lower low, watch that trap high. And again, make sure that trap high is up above the top of that range. The other scenario I'm watching for here right now would be if this market, right, takes off the downside like that and kind of keeps on going. At that point, I'll mark up that low. I'll mark up that high. And again, this is where timing will be important, right? It's difficult to tell where that range will be. I'd like to be a little bit towards the bottom end of that range. The middle of the range is probably going to be the more difficult spot to be trading. So again, this is where a little bit of nuance will come in tomorrow morning in our trade room. If we do see this thing collapse right off of that high, we'll look for that short. Now, we saw an example of this one back here. If you look back here, notice how the market goes running lower and then it kind of staggers its way down there. What you can do is you can draw that channel off that low, right off of that high, and sell that high there too. There's a lot of ways you can use those big moves, right? So if they do happen, if this thing does happen to kind of run lower, right, watch those lower lows like that, mark up that, right, mark up that high, and of course, lots of options for traps, right? Options for channels. And again, we'll know a little more about that, I think, tomorrow morning once we actually see what that drop, right, really looks like. But the bottom line, though, is if I get that drop back into the range here, right, I will try to find a hidden channel, right, and try to get short off the high of that hidden channel. Or if it just simply runs, right, and runs lower here, we'll mark up that low, mark up that high. Keep an eye out for a 2 try trap pattern off the high, right? A buyer failure pattern off the high. Really any of my favorite setups I can rely on off the high of that channel if I have enough momentum, right, going back down again. And again, guys, I'm just simply drawing on the charts right now. You can find a whole lot more detail, right, in those free video classes I mentioned earlier. That free trading course, you'll learn all about these reversals, hidden channels, and that way you'll have a much better, well-rounded education on what we talk about here every evening on this newsletter. Now, let's also keep in mind too, right, it's a very strong move higher, right? The buyers might be trying to break free of this and make a run. Now, where's the next objective for these buyers? It's way up overhead. There's a lot of open space up there, you'll notice, right? A lot of open space between that 41.75, right, 42.50, right? So nice wide open space overhead here. So we might end up seeing these guys hold this pullback and keep going. So we do want to keep in mind on that as well. Now, the most aggressive buy here going higher would be if we saw a jump above the high and then pull back, right? A jump of the high, a pullback, what does it look like? That's a 2 try trap, right? That is a strong move up, a shallow pullback, a higher high in price, 2 try trap below that low. Now, again, that would be the most aggressive because you'd still be inside, right, of the pendulum swing and, of course, inside of that expanding triangle. That will take a little bit of guts, right, to pull the trigger on that one. Whole lot easier pattern would be if they hold this pullback and they jump. If they hold the pullback and jump, I can mark up that new high. I can mark up that low. That creates what? A spike in channel. Now, that spike in channel I could easily get excited about by buying off of the low, right, of that channel. Again, it's a 1, 2, 3 breakout ultimately, right? It's a 1, 2, 3 breakout into that hidden channel pullback. And guys, those hidden channel pullbacks, I'm always looking for, if we go up, looking for that seller failure, right, into those pullback combinations that we talk about a lot on this video. And of course, we cover those combinations in the free trading course. Right, so when I say buy the pullback here, right, to the low of that channel, if you were to zoom in on that area there, right, that's kind of the setup I'm looking for, right? It'll go below the moving average, seller failure into a bullish pullback, right, going higher. And again, I realize this might be confusing for you if you're here for the first time tonight, so make sure you grab that free trading course and you'll learn a lot more of the fine details of this so you can make the most of our time together in tomorrow night's newsletter. And again, we'll do the stuff together tomorrow morning in our trade room. One more thing too to keep in mind too would be if overnight the market kind of grinds higher, right? Keep your eyes on a possible spike in channel. You know, we have one of those right now on the S&P. If the market spikes up and starts grinding, right? Kind of grinds, you know, it's not really jumping, it's kind of grinding here. That's your sign of a spike in channel. Spike in channels are notorious for deep, deep pullbacks. So wait for that pullback. Wait for that moving average to come over. Look for bears trying to sell off the EMA. Buy right into those stops. Failure pattern into a pullback pattern off the EMA and back up to retest the high. Seller failure into bullish pullback, right? So don't be so aggressive if the market kind of staggers its way higher here. If the market kind of chops higher here, just wait patiently for that pullback. It will most likely happen. So there's kind of 2 ways to do this, right? One would be a strong jump up. If that's the case, you got to get after it, right? Got to get after it here. Mark that new channel, right? Find that buy off the low of that hidden channel. However, if it just kind of stair steps its way higher here, right? Sluggish, sluggish, sluggish. Now mark up that channel. Wait for that nice deep pullback. Look for sellers get caught, getting short off the moving average. Buy into their stops. Buy into those pullbacks. And again, making a run up to that big top up there, right? 42.36. At the same time, you know, like I said before, right? Anytime we jump, if the market was to jump, shallow pullback, higher high, right? This kind of goes right along with that prior plan, but strong move up, right? Shallow pullback, higher high, trap low off of that low. These are all the same basic idea here, right? If we do jump, I'm finding that hidden channel. I'm looking for the entries off the low of that hidden channel. Trap patterns would be great. Pullback patterns, failure patterns, anything you can get here to get long off the low of that first test, right, of that hidden channel. So that's my idea here, right, for my buy side. On the sell side again, I want to see 1, I want to see 2, and then back down we go, right? Or do we roll through? We get a good plan on that. How do I buy this market? Got to show me some more proof, right? Got to show me some more proof here on the oil. So we're looking pretty good on this. Hopefully we'll get a nice little nested failure off the high of this trading range. We know how to trade the breakout. The only thing I'm worried about will be if we go back into the range and go to sleep on us. Right? So if we go back into that range and all of a sudden we go to sleep on us here again, right? We saw a little bit of that here in the pre-market here this morning. If we get one more of those here for tomorrow, that will now be a bear move into a range. Stay focused on selling with those buyer failure patterns above the top of the range. Think of these, right? Basically think of these like a bullish breakout pullback that fails. Right? So imagine we go back down to that range, we start going sideways, the market breaks higher, right? Market breaks higher, but again, if we sit here for a while inside that range, what's going to happen is as these buyers try to go in, as these buyers try to buy that pullback, they don't have that momentum any longer. Right? The buyers don't have, if we sit inside that range for a while overnight, the buyers are not going to have that same momentum strength they do right now. It'll be absorbed, right, by that trading range. If that's the case, wait for that breakout, wait for the pullback. That tells you exactly where the stops are, and you can now sell right into those buyers' stop losses. Now, remember, too, they could also hold the pullback, too, right? If they hold the pullback, it becomes a 1, 2, 3 breakout. Mark up that high, mark up that low, and we're buying the first test of the low of that hidden channel. So as you can see, there could definitely be a lot more possible scenarios for tomorrow. Unfortunately, I can't go over everything here on this video, but tomorrow morning, though, at the opening bell, we'll definitely do it together. And again, I'll put all of the membership links for you guys to join me tomorrow morning and every morning in the trade room. I'll put all the trade room links for you guys and the free course links in the description of this YouTube video. All right, we're looking pretty good here. How am I doing so far? Any questions so far? Drop those questions down in the comment section below. Let's wrap things up here right now on the gold right now, on the yellow metal. Now, don't forget, we are looking at, a lot regarding gold this week. Stimulus comes to mind this week, right? We were told last week that sometime this week, we're going to probably hear more definitive information regarding a stimulus package or recovery package or whatever you want to call it, right? Some more stimulus hitting these markets. So whenever we hear about the Fed, whenever we hear about Congress, whenever we hear about the Senate, whenever printing more money, we know gold has that inherent negative correlation, right? So what's bad for the dollar is good for gold. Printing more money is bad for the dollar. So as we hear more about more stimulus, all of a sudden that 2,000, where is it? 2,000, she's up there somewhere. Go. Yeah, that 2,000 big round number is going to start to hold some ground here. Now, obviously, 2,000 is a pretty far distance away right now. It looks like we're more likely to get that measured move in the short term. But you have to think, though, right now, that traders are anchoring their expectations on that next big round number. We saw a great job today. The buyers held above that 1,900 today. And so if they can keep this thing going, that 2,000, again, maybe not tomorrow, but as we go into earnings, right, as we see more stimulus measures this week, as we go into rollover this week, right, we definitely may see some crazy things here on the gold. And again, I mentioned earlier rollover, right, on the gold right now. What you want to do right now is track these two contracts, the GC 0820 and the GC 1220. Right now, we are firmly trading on the 0820. We will likely skip the 1020 contract and go right over to the 1220 contract once that 1220 contract has more volume than the 820 contract. All right, and I won't go into details right now. There's a long list of rules of why every once in a while gold skips that 10-20 contract. So I won't bore you guys with those details right now, but we are watching for that rollover to the 12-20 contract here on the gold. Maybe it's probably not tomorrow, right? But probably going to be end of this week before we go into the month of March's right trading month. Now, looking at the gold here, what do we know about it? Besides the fact that we know volatility, right? Besides the fact that we know stimulus, besides the fact that we got a rollover, what else do we know? It's a big bull market, right? It is a big bull move. The market may really think the stimulus plan is going to come through here because they're obviously buying this thing up very aggressively and then into a range, basically. There is a possibility you might call this a spike in channel. The problem, though, is the channel doesn't really rotate very well, right? You'll notice there's not a lot of rotation right there. You know, if this would have finished off rotation, up, down, up, down, up, down, then yes, if they would have finished off all the rotations, I would call this a spike in channel. But again, if you look at this as a spike in channel right now, you've got to look at it and go, okay, well, why didn't we, right? What happened right there? Right? Why didn't we retest the high of that channel? And the answer for that is because it's a range, right? It's not a spike in channel. It's actually a trading range. So in a bull market that goes into a range, there are really two basic ideas here. If a bull market or range, right? A bull market into a range, there are really two things I'm looking for. One is I want to buy underneath a range, right? I want to get underneath that trading range. Now, my favorite way to buy underneath a range is with a breakout failure, right? So a breakout failure, wait for those bears to get lower, wait for the bears to come in and try to sell that breakout pullback. Once they do, that tells you exactly where their stops are. More importantly, it tells you right where their pain points are, right? Those foolish sellers, don't fight the Fed, right? Don't fight the Fed. That's what everybody knows right now. Don't fight the Fed. The Fed has already told us they will be propping up this economy until it gets back on track, right? So sellers who are trying to sell that pullback, they're going against the trend. They're going against the fundamentals right now. I want to buy into those stop losses, right? It's basically a breakout pullback failure. I call these two try failure patterns below the low of that trading range. Now, another pattern would be a 1, 2, 3 breakout, right? So a 1, 2, 3 breakout to new highs. If I can get that 1, 2, 3 breakout to new highs, I can mark up that new high, mark up that new low, and I can buy off the low of that hidden channel. So again, I'm looking for failure patterns, breakout failures below the low, and I'm ultimately now looking for 1, 2, 3 breakouts right above those highs. Either it's going to be 2 try breakouts or 1, 2, 3 breakouts off the high. Skipping the middle, right? Stay away from those middles. So as I go back to look at my chart now, you can easily see the range. The range is relatively easy to see. I want to buy low, I want to sell high, and avoid the middle. Now, if this thing keeps on going here, right? If we do see that breakout, 1, 2, 3 breakout, again, I'm not trying to buy that first pullback. A lot of these breakouts look very convincing. Make them prove it to you. 1, 2, 3 breakout. Mark up that high, mark up that low, and we're buying the low of that hidden channel. I know we've talked about this quite a bit already on this video, but again, the patterns don't change very much. It's how and where and when we use those patterns. You know, professional traders, we don't have dozens of different patterns, right? A couple key patterns because they're the ones that work the best, right? So 1, 2, 3 breakout into hidden channel pullback. Maybe it's a very strong break higher, a shallow pullback, a higher high into a trap low. That definitely may be the case here, right, for tomorrow as well. So keep an eye on that. And again, I always like to go out, find those additional support levels and combine those with those 2 try traps, those 2 try breakout patterns as we go. If the market sits inside the range, I do nothing, right? We sit on hands inside the middle of that trading range. If the market pulls back, now this is where the pullback is all about what? It's all about momentum. It's all about momentum. Now, there'll probably be a lot of buyers waiting just below that 24.4 area. So if I can get down to that low, if I can get down kind of into this first little rectangle right there, this would be ideal here for a Basically a two-try failure, right? Wait for that bear breakdown, wait for those bears to come in, try to sell short off the moving average, and buy into stops, buy the pullback before we get back up into the range, right? Either of those setups will work for a move back higher. It is a seller failure pattern into a bullish pullback pattern. Where's my target? Other side of the range. Right? Wait for the breakdown. Now, we may also see a much deeper pullback. I mean, look at the chart, right? This thing's been moving higher here quite a bit, right? It's a very bull market. So if we do see a real sharp pullback for whatever reason, right? There could be a lot of reasons why gold may tumble, right? Buyers may get spooked. It may get a bit frothy up overhead here, and the market really may take a nosedive here, probably early in the session, I would imagine, right? Big, deep pullback. Now, what do we do in those situations? We wait for those nested failures, right? So as the market comes down, I've got to really I got to respect the momentum of the bears. That's a big thing, right? I want to be a buyer, but I can't just buy into this thing, right? Because a lot of times you see a strong move down, you're going to see one more leg in the same direction, then we'll come back up. So I always have to anticipate that, right? Anticipate that follow-up leg. Maybe they're trying to go back to the big round number. Maybe they're trying to get that retest of today's low. Tough to tell. But if we do have a strong move down, though, right, very, very strong into the kind of the lower half of that buy zone, now it's pretty simple. Let the bears try once. Let them try twice. Again, my favorite entry here is off those trend lines, right? Off those trap lines. Those are the two ways to be a buyer off it. Again, wait for those bears to try once. Wait for those bears to try twice. One try, two try. You know they're in committed now, right? You know those bears are in at that point. Now it's a matter of time of buying right into their exits and getting that short covering rally snapping right back up to retest the high. Those would be some great setups if we get that really deep pullback, right? Bears try once. Bears try twice. Drawing that trend line in, right? Drawing that trend line in. Moving average comes over, right? Bears try a couple times. We know exactly what their pain points are now. We can buy into those stop losses. Or if we really get lucky, we get the little trap low below that low. It's called a nested failure with a trap, right? Nested failure with a trap, right? Traps are always the best because traps will allow you to buy as low as possible, right? That would be the idea here if we get a really deep, sharp pullback here. Now, can I sell this market right now? Is there anybody to sell this thing? There are really two scenarios to be a seller. The first one would be we'd have to see the market sit here quietly for a while. Right? The only way I could justify being a seller in this market right now, especially since I don't want to fight the Fed on this, is that crown reversal. So I guess the prerequisite to be a short seller would be either we have to see a reversal, right? Either we get a 1, strong move down, 2, pull back to the moving average, and 3, jump off the moving average. If we do see that 1, 2, 3 reversal pattern, well, yeah, absolutely. Mark that low, mark that high. And again, we're getting short off the first test because after all, the first test is the best test of that hidden channel. Boy, that big round number at that point looks really good, right? So the buyers did lose their grip. If we did get that 1, 2, 3 reversal, mark that low, mark that high, I could easily see, right, that 1900 being a big reliable target as we go lower. Again, I'm not trying to sell that first pullback, right? That first pullback will not be reliable enough. We'll buy into the failures of those sellers on that first pullback, right? That's a more reliable way to trade it. The other way to do it, probably the most aggressive, is a crown reversal pattern. We would have to sit inside the range for a while. And as long as we're seeing a real quiet range-bound market tomorrow, if I can get that poke its head higher here, right, buyers will come in. They'll try to buy it once. Now, I'm against the trend right now trying to sell this, so I'm not going to sell it. What I'll do is I'll wait for buyers trying once. I'll wait for buyers trying twice. This is that same nested failure pattern with a trap high. Why do I want a nested? I want to nest it because I'm going against the overall momentum, right? I'm also fighting the Fed. And I want to make sure those buyers really dig their own graves, so to speak, right before we sell into those stop loss, right? Let those buyers, let them try once, let them try twice, and then I want the trap because I want to make sure I'm selling as high as possible. When you're trying to go against a trend like this, you've got to remember, if you wait to sell down here, you're selling into where more buyers will be buying. You have to, when you're going against a trend, you really, and again, I'm not saying this, this is going to be the most aggressive setup. These are gutsy, especially with this gold right now. That trap high, that allows me now to sell where no buyers are buying, right? The buyers will buy on the lows, right? Buyers will buy as it comes down. The best place to get in short on a bull environment like this, above the range, is that trap. We call these crown reversal patterns when they're combined off the top of that trading range. So again, there's a couple different sell setups here right now. This one would definitely be the most aggressive, right? A nested failure, the trap high, or in a range-bound market, I call these crown reversal patterns, or we get that 1, 2, 3 reversal right into that hidden channel pullback. But again, be very careful forcing these reversals right now. Don't fight the Fed, right? Don't fight the Fed. All right, we're ready to rock and roll here. Boy, feels great to be back with you guys here tonight. Hope you guys enjoyed the weekend. Got a big week this week, don't we? Earnings, stimulus, rollover. We got the Fed here this week. I am super excited for tomorrow morning's trade room. Hope I'll see you with me. Don't forget, you can find all of the membership information is in the description of this YouTube video. So get registered. Come out and join me tomorrow morning and trade it with me tomorrow at 8 o'clock Eastern time. And don't be afraid to call me in the office. Right? Call that toll-free phone number. Send me an email. Emails are back online this week. I do apologize for the delay last week. Got that issue all worked out middle of last week. But definitely send us an email. Right? Jump on Skype. Call me here in the office. Don't be afraid to use that live support tool on the right-hand side. We can chat back and forth, and I can answer all your most important questions. Most important thing, though, if you didn't already, though, make sure you subscribe to our YouTube channel. Hit that thumbs up button for me if you guys love the content tonight. Drop those questions if you have any questions in the comment section below. And as always, come back and see us again tomorrow night. If I don't see you guys tomorrow morning, obviously, come back and see us tomorrow night on tomorrow night's edition of our nightly newsletter. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.